December 24th, 2025. Let's see how many times the strategy came into effect today. This is the daily chart with the momentum indicator for the daily momentum. And look what's been happening the past 2 weeks. Okay, we had a lot of selling. The momentum started to switch. And now we're going into the third day with an upward bias in the momentum. So before the market even opens today, we had a short day. It's a half market day because tomorrow is Christmas. Merry Christmas to everybody. Happy holidays to you. Hope you're all doing well. I hope everybody's doing well, but I know it's not the case. You know what I mean? That's a crazy world we live in. Life is short. And just like the things in this market, everything happens, but the life of the moves are always short. So you have to react. Don't try to predict. All we know before the market opens today is we have buying pressure. So we look for the 5 minutes to be aligned, the 5-minute twins. Let's go to the market open. So 5-minute normal hours right at market open. It's got a little bit of upward bias, and then our 5-minute extended is not aligned. It's going down. We need to wait till they're aligned. That's the first thing that we need to take a trade. We don't take a trade unless the 5 minutes are aligned. We got the 30-minute data over here telling us a larger current, but we care more about the 5. And looking here, we get an alignment. Look here, now the momentum's going upward. Okay. Well, just to start over, right here is the market open. Okay, we just don't have an alignment. We're going up. Here we're going down. They sort of become aligned. Right here. Now we're starting to go down. Look here. Still going down. So now you could say they're both aligned to the downside, which means we would need a volume confluence and we would need to be on the right side of the V on this 2-minute. You see how these move in V's? Just a bunch of V's. Sometimes they're clean, sometimes they're not. My point is we need to be on the right side of the momentum here with a volume confluence when this is happening, when the alignment between the 5 minutes is happening. So the only volume confluence we get is right here. A volume bar greater than the previous 3. But at this point in time, we're not even crossed over here, so there's no alignment. That's why we don't take this trade. Yes, it's a volume bar greater than the previous 3. Yes, we're moving downward at this time. But if one of the 5-minute data displays, which this one is not aligned to the downside yet, we do not take the trade. If you do take the trade, it's a risky setup, and that's not the strategy. Right here, a trade that I took was absolutely fine because we now have upward momentum crossing over right now on this 5-minute normal hours. 5-minute extended hours, we are going up, up, up. We're on the right side of the 2-minute MACD momentum. We get a volume bar greater than the previous 3. So I entered the trade here at the close of this candle, put my stop loss down here, and then put my first target here, which it won. It was a good trade. These red lines, ignore these. These are just me making marks on the chart. Right here, I took an extremely good trade that I played correctly. So here, look what's happening on the 5-minute momentum. The momentum started dying, then it started building back. Okay, this is right here at this present time, this candle. Look what happens. We get a volume bar greater than the previous 3. We're on the right side of the momentum. My entry was right here at the close of the candle. I put my stop loss slightly below this candle. My first target got hit. I held on and took profit right here. I made up for what I did yesterday. My big mistake yesterday was taking a trade that would have never come back. Just like this trade. It would have never come back. It would have just kept going and going and going, making more and more and more money. But I didn't hold it properly. But today I made up for that mistake. And I captured this beautiful setup right here. That is the strategy I look for every day. Not just in NQ futures or ES futures, but I also apply it to real stocks that have a lot of momentum and volume going on. And I'm going to show you a trade I took today based on that principle. Based on the strategy, there was no more true setups the rest of the day. It was basically right here. This was the only one. We're on the right side of the momentum here. We get a volume bar greater than the previous 3. We're about to cross over, but we haven't done it yet. So that's not even officially a good, that's not the official strategy either. Here, we get essentially the same thing. That's why I made this mark here. We're on the right side of the momentum here. We're starting to curl. It's kind of weak, but it is curling. And then we get a volume bar greater than the previous three. We're expanding here. So your entry, I didn't take this trade, but your entry would have been at the close of this candle. Stop loss slightly above that candle. And then boom, you would have hit multiple targets. Multiple targets you would have had with that one. This was an intuitive setup. Look, we get a volume bar greater than the previous three, but this is the last 10 minutes, which means that the volatility is about to go insane. Every day, the last 10 minutes of the market in NQ and in ES, the volatility goes insane because of algorithms. That's why, look at the volume here. That's all you need to know to validate what I'm saying, right? But the reason I didn't take this trade is because, look, we didn't have any support on the 5-minute data yet. So if we don't have any support on the 5-minute data, that's a foolish setup. It's a high risk. You should be very careful. Yes, it would have ended up being a winner because the entry would be here, stop loss slightly below that candle. This target would have been hit. That second target would have also gotten hit. So it was a good, it was a win, but I didn't take any more trades for the day. We just captured this really beautiful big trade here. And then there's another ticker, Sober, S-O-B-R. They're working on stuff to... you should just look up the company, and it's a pharmaceutical based, they're making stuff for alcohol consumption and metabolism to prevent hangovers and to also do some other things. Interesting company. It started running up heavily pre-market. Look at this, close of yesterday, boom. And then right before the open, huge run up. This is a huge runner for today. It was on the top tickers, the highest amount of volume. So my strategy came into effect with this one right here. Look what happens right here. We are moving up. We haven't crossed over yet, but we're moving up. The momentum you can see is clearly going up. We've got ultra strong upward momentum from the day because we had a huge run up, and we have a pulse in volume, one volume bar greater than the previous three. We're on the right side of the momentum. So though this wasn't the official strategy, I didn't wait for a crossover. That would have been official. I simply traded the requirement of the crossover for just the requirement of the momentum in the histogram. As long as this histogram momentum was going aligned with this trade to the upside, then I was going to stay in the trade. And look how that played out. My entry was right here on this level here. Stop loss here, which never fully triggered. It got close. And then look at this run up. It ran up 10%. I didn't capture the full 10%. I took profit and got out because it was the last 2 minutes of the market. But that was one setup there that I took as well. With all that being said, I hope you have happy holidays, Merry Christmas to you. I'll see you in the next one. Take care now.